Good morning, everybody. So just thought I'd jump on and do this video about mortgages question and answer session. And I'm joined by Lucy Louden. Lucy is the owner and director of Northdown Financial Services. And she's best placed to answer any questions that any of you might have, which we've had some in, which is great. So I think probably just to kick off, Lucy, if you can kind of give us a little bit of information about you, a bit of your history, how you got to where you are now, yeah, off you go.
Okay, right. So I trained as a financial advisor at HSBC a long time ago. I did pensions, investments, mortgages, everything. Left there to have kids, but then came back to do mortgages 3-4 years ago as a broker. I worked for a local company for a while, but have decided that my next progression is to set up on my own and give my clients the service I want to give them and do it my way, basically.
So how do you think that differs to what you've done before then?
So my ethos is basically customer service. You'll always be able to get hold of me. If you ask me a question, I'll answer it straight away. I'm not one of those people that can't answer the phone or won't return a call because it will play on my mind. So you'll always be able to talk to me. Excellent.
Okay. So I guess really basic question, but probably not a basic answer, is who can get a mortgage?
You'd be surprised about who can get a mortgage. It's pretty much most people. It does matter obviously what you've done credit history wise, but it all depends on how recent credit history problems are. So it might be that you think I've got such bad credit I can't do it, but actually because I am representative of the whole of market and can offer quite a lot of different mortgages, ones you've never heard of before,
yeah,
you'd be surprised, you still might actually be able to do it. So it's definitely still worth a phone call to me. Tell me what your issues are and I can tell you whether it's a go or not.
Right, okay. So what sort of deposit do you need? Or I guess what's the minimum and what's the best deposit you can have to get the best deals?
Technically, on some scenarios, you might not need a deposit at all.
Wow, okay.
So I've got lenders that will do parents' equity in their property as a guarantor for the deposit that you haven't got.
Okay.
If you're doing shared ownership, potentially you don't have to have a deposit on that either. I've got lenders that don't need a deposit for that. But if you're doing a straightforward normal purchase on your own, you need a 5% deposit.
Okay.
But be careful where that deposit comes from.
Okay.
Because, if it's gifted, ideally it needs to be an immediate family member. It can't be your next door neighbour potentially, can't be some random off the street. There are rules about who can gift you the deposit and who can't.
Okay, so that would be parents and
parents, grandparents, brothers, sisters, sort of blurred lines on sort of aunts and uncles and stuff.
Okay. Cool. Right.
So with deposits,
yeah,
you can't borrow it.
You can't what, sorry?
Can't borrow your deposit. You can't get a personal loan for your deposit. Yeah. But I do have one option that if that is the only option you can do, potentially we can still look at it.
I thought you might. Well done. Right. Okay. So you kind of sort of mentioned earlier about the service that you offer and that you're always there for your clients. So I mean, I guess you work from home, do you? Do you have an office?
I have a lovely office, as you can see, down the bottom of my garden, which is actually geared up. Thank you. It's geared up to actually have clients in here.
Okay.
So you can either come to me, if you prefer. I can come out to you and we can sit in your living room or dining room table. I'm more than happy to do telephone conversations, telephone appointments. We can do Zooms and we can do whatever makes you more comfortable or whatever's most convenient.
Right, brilliant. Okay, so if someone wants to talk to you about mortgages, I guess, what do they need and what does that kind of process look like?
Initial conversation Not necessarily, you don't need a lot, but if you end up having lots of different types of incomes, then I need to know those figures. So if you get overtime and bonuses and things like that, we need to have, lenders work off averages. So I'd need to have either last 3 months figures so I can work off your average for your overtime and things like that.
Right. Okay. And so the process that you so you have initial conversation with somebody about possibly what they want to achieve and where they want to be, and then does that kind of lead on to another appointment, or?
Yeah, I mean, I'm happy. Normally when I have an initial conversation, I'll gather all the information I possibly can. It might be the client needs to go away and come back, and then I know exactly what position they're in and where I need to go, and then we'll just have we can either set appointments or we can just sort of ring each other when it's convenient. Okay. So it doesn't need to be, it can either be very, very structured, where we say, right, I'll call you on this time, or you just call me when you need to, or I'll call you when I've got information. So it's down to the client of what they prefer. Okay.
And just briefly, you mentioned earlier that your whole of market. What does that mean for your clients?
It's representative of the whole of market. So I've got over 100 different lenders. What that means is if it doesn't fit with someone, I can go somewhere else, and I can keep going and going and going until I literally find you someone that is going to stick with. And not blow my own trumpet, but that is my forte. I will not give up. So it might not be possible with the first lender we go to. It might not fit their criteria exactly, but normally I've got something in my back pocket where I know it's going to be all right.
Okay, no problem. Right, okay, so leasehold property. So if someone wanted to buy a leasehold property, how would that differ to buying a freehold property?
Okay, with leaseholds, you've just got to be really, really careful on how long you've got left on that lease. So most lenders, I would say the minimum is about 75 years to give us more choices. Anything below that starts being an issue with the lender and they don't like it and they won't accept the application.
Right, okay.
But it's to protect the buyer as well, because at the end of the mortgage term, it might be that you've only got 20 years left on that lease, and that makes basically your flat unsellable.
Yeah.
And then you haven't got your asset, you haven't got, you can't sell it. So it's pointless. Also with leases, what you've got to be careful is how that lease is set up and the terms and conditions around that lease. So if it's going to be doubling every year, where you've got a ground rent, lenders don't like it. So it's all to do with the terms and conditions. So it's done by a case-by-case basis, which, I'll look at it with you. But you do have to be really, really careful with leases and ground rents and service charges.
Right, okay. So like with the service charges, will that like impact on how much you can borrow?
It comes into the affordability as well. So
it does.
Things like your outgoings, your personal loans, credit cards, car leases, living costs are all taken into account on an application and will fit the lender's affordability criteria. If the ground rent is huge, then that's going to impact how much you can borrow, and it might mean that we can't get you what you need on your mortgage application.
Right, okay. Super. Right, okay. So I'm going to put you on the spot a little bit here. So these are some of the questions that we've had in. So hopefully you'll be able to help these people. So we had a question from a guy called Chris, who said he's 60 years old and wanted to know if it was possible if he could get a mortgage.
Yeah, absolutely. Can.
Okay.
Most lenders go up to the age of 70. I've got some that will go 75. I've got one that go up to 80, or a few that go up to 80 on earned income. And I've got one that'll actually go up to 95.
Wow, really?
Yeah, so it's still possible, absolutely possible. We can use rental income, we can use pension income, we can use lots and lots of different incomes. Right,
okay. Lovely. Right, okay. Then we had a question from a lady called Leanne, who's asked, she's a single mother receiving benefits and maintenance as her only source of income. She's asking what she needs to look out for when buying a property.
Okay, so not all lenders will take into account child benefit, maintenance income and benefits, but There are definitely some out there that will use 100% of it. So, and we've got lenders out there as well that will just, if you don't earn a salary, but you just have this sort of income, they will just use that. So it's definitely still possible.
Okay. Right. Okay. And then we've got Jamie, who says, if I have bad credit, can I get a mortgage? And do lenders look at my bank statements and look at how I spend my money? So quite a long one there.
So depending on what the bad credit is, so if you've got 5 CCJs registered last month, likelihood is probably not. But if you've got CCJs registered 6 months ago, then doable. Defaults are still doable. It all depends as well what the default is and how much they are and whether they're satisfied. So it's all done by case basis, but you'd be very surprised at how bad your credit can be and still be able to get a mortgage. Lenders will look at things like payday loans. So if you've had those in the last 6 months, then it's going to be difficult because they really don't like them. They'll look at statements, and I need to look at statements as well to look to see how you're spending your money. So if you are doing online betting, for example, which I've had a lot of recently, it's not viewed very well. And I have to sort of include all your betting transactions in the affordability criteria, just in case there's an issue there and it's going to be ongoing once the mortgage is in place. So the best bet is to be clean bank statements for anything like that for 3 months.
Right, okay, that's a good one. Thank you very much. Couple more. So Molly says that she's a company director and pays herself very little income. So can she still get a mortgage?
Yes, so we've got lenders that will take into account net profit after tax. So it doesn't necessarily have to be what you draw from the company, it can be what's still in the company.
Right, okay.
And it'll take an average of 2 years. So I've got a couple going through at the moment where actually it's much better to use the retained net profit.
Right, okay. And that's for 2 years, you said? The
average of 2 years, yeah. I mean, I have got one lender that will do 1 year self-employed. Right, but most of them are going to want a minimum of 2 years.
Right, okay, super. Sort of touched on this a little bit earlier, but Hayley says, can she have a parent as a guarantor? So we mentioned about the deposits earlier, didn't we?
Yes.
What about as a guarantor?
There's a scenario called joint borrower, sole proprietor. So what that means is that the child lives in the property, but there's 2 people on the mortgage, for example. So it could be a parent. What that means is because they're not on the deeds of the property, it means that the higher rate of stamp duty is not payable. It's just the normal stamp duty. I've got lenders that will do it no problem at all. I've got quite a few that will do it. We'll take into account the parent's income as well as the child's income to enable you to borrow more, basically. And they're just sort of on the mortgage as well as a backup in case the child can't afford the mortgage payments.
Right, okay. Last question is from Lucy and Lauren. Is it possible to get a mortgage with a sibling to help us both get on the property ladder? Yeah,
I do loads of those. That's not a problem. I've done cousin, I've done friends. Yeah, it's not a rule.
Is really. There's no restrictions there at all?
No.
Good stuff. Right, okay. So look, thanks to everyone who sent those questions in. I hope Lucy's answered them. I know she has. So, look, I mean, I know, you know, I for one can't recommend Lucy enough. We've been working together for a few months now. We're both local people with Sittingbourne, and I think that's really important to support local businesses. And look, thanks for approaching me those months ago to work with me. I'm really pleased with how things are going.
Oh, good.
So if somebody wanted to contact you, Lucy, about a mortgage, how would they do that?
If you go onto my website, which is www.northdownfinancialservices.co.uk, I have a Facebook page as well. Or you can just call me on 07919 144 398.
Fantastic. Have you got anything else that you would like to add at all, Lucy?
No, even if you just want to ring up for an initial chat, as to whether, you know, you might be way off down the line, then please feel free.
No problem. Look, thank you so much for taking time out your day today to have a chat with everybody and me. And look, I'm sure I'll be speaking to you very, very soon. I know we've got some cases going through at the moment. But yeah, thank you very much. And thank you everybody for watching. See you all later. Bye.